This is the biggest scam in real estate. That people are telling you there's only one way to make money in real estate. And there are a million ways to make money in real estate in terms of asset classes, flipping, investing, wholesaling, buy and hold, of course. But when it comes to long-term investing for the long haul, there actually are five ways to make more money and to understand how to leverage that as an asset that makes you truly wealthy in your life and you the edge that you need to go to the next level and create a big legacy. Hey, I'm Jordan Silver. I'm one of the founders of Elite Edge, Elite Edge Real Estate, an elite real estate group that $1.6 billion in transactions over the past few years. And I help people like you every single day up level in all areas of your life and give you the edge that you want and need to have massive amount of impact. And I'm going to break down today the five ways and the five reasons, more likely actually, on why you want to buy real estate. So a lot of people, number one is cash flow. Everyone tells you to buy real estate for cash flow, which is honestly is probably the lowest on our list. Because let's face it, if you have $100,000 to $300,000 to invest and you're buying for cash flow, that extra $100, $500, maybe $1,000 a month that you're making from your assets will probably not change your life that much. Now, eventually, when you have a whole bunch of them, it does make a massive difference, and you should live off of your passive income if you can, and not use your active income for your life. That's just be for more investments, more assets, and more connections. But number one is cash flow. And typically, when you look at real estate, if you're buying a primary market, like Austin, Texas, where I'm at right now, you're mostly buying not for cash flow because you're probably going to make around $100 per door that you own. So if you own a single family house, you should profit $100. So your NOI, net operating income, is about $100 per month of free cash flow you're given. In some places, $300, $500. If you do Airbnb, maybe $1,000 to $2,000 per month. It can add up in all ranges, but it really depends on how much involvement you want to have, whether it's yourself, property managers, list goes on. But this is the biggest reason why people get into real estate investing because they think cash flow is the king. But honestly, most people I'm speaking to from my investors, that's like the bottom of the equation. Cash flow is great. You definitely want it. Passive income is not real. So I have to break it to you because it always have some kind of upkeep. Even with property managers, having people working for you, there's still some involvement. But it is the safest investment you can make over the long haul. Which goes to number two. Number two is leverage. Leverage is one of the biggest factors to buying real estate because you're able to control a piece of property that costs $100K, $500K, $1 million, $5 or $10 million for only, in some cases, zero down to 20, 25, 30% down for a property. So the easy math, let's say the place you're buying is $10 million. Let's say it's a big complex. You'll be paying either nothing down, which is unlikely, but it's possible. You can be doing a 10% down, which is $1 million, 20%, $2 million, or 30%, which is $3 million down to own an asset that is worth $10 million. If you buy it correctly, that asset should also give you cash flow and pay for itself. And that is the power of real estate. Because the cash flow is great, but the cash flow more so, this allows you to buy more assets and cover the debt services through your NOI. Unless you be through your gross income, which gives you NOI. And a whole video breaking down that over here that kind of walks you through exactly what that looks like in a live example that I did last week with my other clients buying a storage unit property for themselves. And on that note, if you want help buying or selling real estate in all 50 states and 25 different countries, down below, link in the description, the first comment in the side of the comment section, how to call with me and my team and help you personally get the next deal underneath your belt, or the buying, selling, or commercial real estate. I'm one of the top 1% agents in all of America, and also a TV show host as well. And we break records from 1 to 10 mile radius, outperforming every agent and home in that radius. And I've done so in the past 5 years. The home we just sold last week, we outperformed every agent and home in the same zip code 5 years in a row up to this date. So we're really good at what we do. If you want to help with that, let me know. Happy to chat. Obviously, it's a free call with me. Again, all 50 states and 25 countries. And this is Paul Leverage. Leverage there. You're leveraging my experience, leveraging my background to get more support in your goals and save you more time, money, or make more money through that endeavor. This is why leverage is so powerful. Leverage can help you so much really get more control. And also with leverage, it's not just leverage in terms of owning an asset, but after you own the asset, you now have more leverage with the banks, the lenders, and you can also use the equity you have to buy more properties. Because that piece of asset you have now becomes your bank. Because now, let's say you have $5 million in equity and you pull out $3 million, you can now go and buy another asset that's like that one or different from that one, and that is leverage in the truest sense. So owning real estate is one of the biggest reasons why you want it, is for leverage. So far we've broken down cash flow, broken down leverage. Number 3 is equity pay down. This is also a big magic behind real estate investing, because you own real estate, it's not for yourself, because for yourself it's a liability, which is sad to hear for most people, but an asset brings you money, a liability costs you money. So for you to have equity pay down, it should not be done by yourself, it should be done through your tenants. So it's for commercial real estate, it could be your tenants. If it's storage units, that could be the stuff they have in the storage. If it's apartment complexes, that is people. If it's houses, same people. Again, more often than not, people involved in everything we do in real estate. But like, that will be equity pay down. So your rent, your mortgage costs you, easy math, $10K a month. I don't mean big numbers here, but this is easy math this way. $10K a month, and your people are paying you $15K a month. That means you're cash flowing, probably $1,000 or $2,000. Obviously, getting that kind of math is really hard. So probably it's like $12,000 a month. Your mortgage is $10K, and cash flowing like $1,000 maximum after all is said and done. And you're saving money for the property manager, for expenses, toilets, and so forth, and management. But that being aside, the $10K a month that they're paying you extra on top of that is paying down your mortgage every single year. Not $120K, because obviously if it's not past that 10-year threshold, it's not doing this principal, it's interest in principal. But at the same time, like, you're still paying down a high amount of equity in your property, which is giving you not only paying down your loan for you every single year, but also giving you more equity, which is more leverage to buy more properties. Again, the goal of real estate investing, hopefully for most people, and people on this channel, is to build true wealth, legacy, and impact. And having one property, one asset is not enough. You want to leverage what you have in your properties to buy more properties. Especially if you're young. If you're like below 40 to 50, I would say having 30 to 40% of equity in the property is like a good amount. If you're older than like 50 years old, probably more like 70% equity in the house or in the asset. That way, you're always protected and you can pass it on to other people, not worry about things, and you don't need to get aggressive at that age. But unless you want to, obviously, like, I'm not gonna tell you how aggressive to be. But if you're younger, you can be super aggressive and you can take out as much as you can and keep that wiggle room in there to have protection because the market crashes for any reason. You always have that buffer zone. Because you think about selling real estate, if something happened, Lord forbid, you have 6% already accounted for agents, for the buyer agent and seller agent, another 3% or so for closing costs. Let's say 10% to round up. That means that you have only 20% of them If all is said and done, you only make 10%. And that's even pushing it a little bit. So you want to have at least 20, 30% in my mind of equity at all times in your property, maybe 30 to 40, like I said before, in there to have true protection and leverage the other part you have to buy more assets every single year. And that way you have a huge portfolio in the next 5, 10 years from now. But equity paydown. Equity paydown is a big, big part of buying properties. The next big part that I love a lot, and more people buy real estate for, especially super savvy investors, is appreciation. That's number 4. Appreciation is as it sounds. Every single year, depending on where you live in the world, your home or your asset will appreciate by 3, 5, 10, 20% or higher sometimes, depending on the market. And that allows you to get pretty much free money, because let's say your home is worth $1 million today and appreciated by 10% next year. You just made $100,000 in equity due to appreciation, and you made money from the equity pay down from your tenants. So right there, let's say 150K, and that math there, you just made in free money plus the cash flow and plus leveraging for more properties. And now you can kind of see why it's so powerful and how these are the 5 main things that work together when doing real estate investing at a high level. Appreciation is your best friend. Inside of America, in most places, most states and cities, you should see your home or asset double every 7 to 12 years. That's like the rule of thumb. Every 7 to 12 years, in most places, your assets should double in value. So you bought it for $1 million today, and 10 years from now, that same $1 million property is now worth $2 million. And after 10 years, you pay down enough interest and all the things you need to pay down, and now your principal is now taking true effect. You pay less per month for that. Now you have a huge payoff then. And then 2, you also have over $1 million now in free equity, plus your pay down and plus your cash flow on the way. And then the 5th one, which I think a lot of people get into real estate investing for, is going to be taxes. Taxes is why most people buy real estate on top of the 4 as well, because there are so many ways to really play the tax game in real estate. One is depreciation. You can buy a property and depreciate it by a certain amount, and that allows you to write off all that as taxes. Number 2, if you have loans given to you from the leverage of the property, in terms of the HELOC or home line of credit or from a refinance, that is technically debt, and debt is not taxable. So if you parked all your capital into properties, took out a HELOC or refinance, and then gave you back $200K, that $200K you just got back is tax-free. That's one tax opportunity. So you have your depreciation, you have leveraging the credit or debt, I guess you would say, from the property. Number 3, if you are a real estate professional, meaning you do 2,000 hours a year working in real estate, not even a licensed agent, but 5 hours a day over the whole year, every single day, that means you can now do cost segregation. You can force depreciate properties as well, and that allows you to have an even bigger tax write-off. So there are a few ways you can do it. Also, you have a 1031 exchange. If you sell a property and you reinvest that same capital into another property you already found before you did this whole process that's like the first one, you can now do a 1031 exchange and pay less taxes there too. Again, I can go on forever. If you think about America, all the laws was made by people who was landowners owning real estate, not just land, but real estate as a whole, or business owners. So you have those two things together, you have way more opportunity to really maximize your control and maximize support. Also, I have a whole video over here that breaks down exactly all the strategy for taxes. For myself, last year we paid no money in taxes and we made a lot of income, but thankfully we understand the tax game. My CPA does even more than I do, helped us do nothing legally, of course. Well, those are the 5 ways to really understand why people buy real estate. Number one is cash flow. Super great. You want to have that income, but it's not the end all be all. Number two is leverage. Leverage is one of the most important aspects of buying real estate, and there are many ways to leverage properties. Number three is equity pay down from the tenants you have in place. Pretty much paying for your asset for you, which is amazing. I know for some people it sounds cruel, but like you're giving them a service. The value you're giving to them is having a property, having a place to store the stuff at, having a business to use, you name it, is an equal exchange. It's a fair trade-off. Number four is going to be appreciation. And the fifth one we covered is taxes. These are the 5 reasons why people buy real estate inside America, and also why it's made more millionaires than almost any other industry out there, and also why it's one of the oldest financial instruments to make wealth. Hope you like this video. Down below, if you have any questions, let me know. I'm always happy to answer questions for you. If you need help buying or selling real estate in all 50 states and 25 countries, again, down below, I call me and my team to help you in all different areas, whether it's buying, selling, or investing, all across America. And of course, thanks for watching. You want more support, more videos, more strategies to grow your life as the edge that you need. Over here, we have a whole breakdown helping you understand the tax game even more. And below this one, we break down a whole bunch of things for you on the whole series of Elite Edge we have for you as well. But of course, thanks for watching. For the best of yet, I'll see you at the top. Happy to have you here.